Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
I'm going to say happy fall-like weather to you because I don't know what it's doing in Missouri, but it's like 70 and gorgeous here.
We also have very good temperatures, although they're saying very hot for this Labor Day weekend once we get beyond Saturday.
Well, it's nice to enjoy it while we can. Scott, as we get started this week, let's take a look and see what happened on the livestock markets.
Yeah, when you look at markets for the most part this week, we have another week of lower prices for the most part across the board. When we look at cash cattle, live cattle down about $2 for the week. You know, that's the lowest we've seen live cash cattle prices since really November of 2016. So although we've had a lot of positive this year, it's certainly coming back to remind us of where we were not that long ago. Live cattle futures were down about $1.75 for the week, a little bit of volatility along the way, but we will be down. Feeder cattle futures were up $2 for the week. While we look at feeder cattle cash prices, call those 2 to 8 higher. Demand was pretty good for the week. I would say a lot of folks were looking ahead, realizing next week some of those auction markets will be closed given Labor Day. The choice beef cutout was marginally lower for the week, so not a lot of change there. The choice select spread continues to narrow, some of the lowest we've seen since really early 2017. On the hog side, cash hogs down $4.60 for the week, so it hasn't been a good week for cash hogs. Lean hog futures are going to end up about $1.25 lower for the week. They certainly started the week off with much lower prices, but have recovered some of that as we move through the week on the future side. That pork cutout value continues to move lower, down about $3.50 for the week, led again by those belly prices that were down about 24 cents for the week. So belly prices have certainly been at much at play for these lower pork cutout values. I like to remind us, it wasn't that many weeks ago that we were talking about belly prices about $2.15 a pound that today are now sitting at $1.28. That's a pretty hefty decline in a short period of time. However, I like to remind us those are pork belly prices that are still over 50% higher than were about this time a year ago. So we could see more weakness, I guess, as we look ahead, but that's the markets for the week.
Scott, as we talk a little bit about that decline in belly, there's been some days where there's been some pretty big drops. Is it seasonal or is there something else going on? Because I really don't see a decline in the popularity of bacon.
Yeah, so number one, I'd like to remind us that $2.15 belly prices were record level prices. Doesn't take this economist long to go, the cure for high prices is high prices. So I think we're getting a little bit of that happening now. I think seasonality plays in here as we've gone through the summer months, maybe a little less demand for some of those belly products than where we were at. But again, reminding us we're still above a year ago level. I think there is some continued concern about what happens to pork supplies as we get here in the latter part of 2017, and that's been at play as well in terms of just how many hogs we have coming here as we go through the remainder of the year. Plenty of pork supplies, I guess, might be on the minds of some as we've seen pork cutout value lower as well as cash hog prices moving lower.
And we're going to talk a little bit about what we need for large supplies, which is continued strong demand a little bit later. But first, let's talk a little bit about farm income. USDA released its latest numbers this week. How does it look on the livestock side?
Yeah, so when you look at what USDA gave us this week on farm income, number one, I'll say the livestock sector has been helpful in terms of that overall U.S. farm income estimate that we got from USDA. I sometimes if you look at livestock cash receipts, which are forecast to increase about $13.6 billion, and you say, what about the expense side of this? So let's look at feed expenses and purchase livestock expenses. You take all three of those things, which is a pretty crude measure of livestock profitability, it would say we'll be up about $15 billion in 2017 relative to 2016. So a move in the right direction. We we'll remind ourselves that much of 2017, these livestock prices exceeded what many of us would have expected. And I think that really shows up in what USDA released today or on Wednesday in terms of farm income.
We talked a little bit about supply and concern about supply. We also need to talk a little bit about demand. Let's start first on the domestic side of things. Restaurant Performance Index was released this week. What do we take from those numbers?
Yeah, when you look at the July numbers that we got out this week on the Restaurant Performance Index, first of all, I'll say almost across the board, we are talking about a number that's above 100, so growth in those numbers. However, when you look at the overall RPI for July, it's set at up 0.6%. That's a slowing relative to what we saw in the June numbers where we were up 1%. Customer traffic continues to be troubling. When you look at the numbers out of the July report, down 1.1%. Tells us we're getting a little less customer traffic in some of these stores that are being a part of the survey. Also, the expectations index. So what do we see as we look ahead? In June, that expectations index set at 101.3. In July, it's setting at 100.8. So still positive, but slowing down. So I guess, we don't want to make too much out of just 1 month of what's a little less optimism on that RPI. But I will say, when you look at what we're doing on the supply side, we need all the demand strength that we can get. And let's hope that those July numbers aren't the start of a trend of some lower Restaurant Performance Index measures as we move ahead, because we don't need that, just given where these markets are at today.
To complement that, though, also lower than expected were the jobs totals for this month.
Yeah, absolutely. So, we got those numbers out this morning. Payroll jobs rose 156,000, which was below the 180,000 estimate that we had pre-report on average. So growth, absolutely. I think we also got some revisions down in some of the older data as well, but it suggests a little bit of slowing, and we'll have to wait and see whether that continues as we move forward. But we need more jobs. We need more dollars in consumers' pockets for the meat supplies that we have. I will say, when you look at markets, however, today, stock market's up despite what we started with the jobs report out this morning. So we've had pretty strong economic growth signals in that second quarter GDP. So hopefully that'll continue. But if we slow GDP growth and we continue to slow job numbers, I do worry about what that sets in motion for 2018 on the livestock side.
Scott, we know domestic demand needs to continue strong for the amount of supply that we have coming into the market, but also we need to remain, our global export demand needs to not only maintain strength, but it needs to continue to grow. As we look at the big picture, it looks like there are a couple of countries that are looking to give the U.S. a run for their money.
Yeah, exactly. So when you look at that export demand, it's really both sides of this picture, right? It's the consumers in those other countries and what they demand, as well as what's happening to those other producing countries as well. As I look back at 2017, I'll say there was some lag, I think, in terms of growth in exports from other livestock producing countries that I think we might have been able to benefit from. And that seems to be changing. I mean, you can take a country like Brazil, who we know have had some issues with beef exports, given some of the issues they've faced this year. And I'll say, when you look at the recent data, July 2017, beef exports were up 27% relative to a year ago in Brazil. Now, they're going to be down for the year, but just reminds us that we do have competition in some markets when it comes to the beef side. You take Australia, who's had a lot of drought issues for a period of time, now looking at a feedlot industry that's at a record level. Tells me we might get more competition for that grain-fed beef market that we've traditionally been, right on top of. And even our neighbors to the north talking about stronger prices and perhaps some expansion as we look ahead into 2018. It is both sides, and growth in production in the rest of the world equally could be troubling as we move into 2018.
Do we need to look at those markets like China, which is a potential growing market for the U.S., that trade has started slow, but has opportunity and plenty of room for growth as those like targeted areas?
Yeah, I think there's the plus side of this. So I think the rest of the world may be growing supplies of meat as well as the United States, but trying to figure out exactly what we end up with in China and how we target that to increase or maximize our ability to make real penetration in that marketplace could be really helpful for the U.S. And much of what we have to continue to do. We can never be satisfied when we get on this train, if you will. We have to continue to talk about growth and export markets in front of us if we want to talk about higher prices, or we want to talk about continued expansion of meat supplies in this country. Anytime that stops, all of a sudden we have a much less optimistic view of where prices are going to head.
Scott, I want to turn our conversation to what's going on here in the U.S. As we take a look at the last week's events, and Hurricane Harvey hit Houston and really hit a very large cattle producing portion of the state. And while our thoughts and prayers continue to go out to those families and farmers and ranchers that are affected by the flooding and the hurricane, what does this do to our cattle inventory when we're talking about that amount of cattle potentially impacted?
Yeah, it's a really good question. We're really early in that process, but when you look at the counties in Texas that have been affected, it is more than a quarter of beef cow inventory in Texas that appears to potentially be in jeopardy. I like to remind us that is less than 5% of the national total when you look at beef cow numbers. And it is a very terrible situation. And those that are living through it, it's very devastating to them. Although all of the events we tend to see in terms of these natural disasters, hopefully at the end of the day, we see less devastation in terms of beef cow numbers than we might anticipate. That's kind of been the norm of late, whether you go back a few years to the South Dakota ice and snowstorms. We talked about much larger effects than we really probably ended up with at the end of the day. I'm assuming that might be the case, that hopefully we got a lot more of those cows to higher ground than and out of harm's way for the most part. But I will say, you take the Hurricane Harvey situation, you take the current drought going on in the Dakotas, all those things maybe help press down a little bit on the growth in beef cow inventory that we otherwise would have expected. Maybe and you don't wish that on anyone, but from a price perspective, maybe that's a little bit of positive news as we get into 18 and 19, that a little less supply of calves than we otherwise would have thought, as folks had to liquidate as a result of drought or excess water, as we see from Harvey. So maybe there is a little bit of positive on the price front longer term there, but we'll have to wait and see just how things play out over the next few weeks.
And I have to know if you've seen some of the videos that have been going around virally about how they're moving cattle and getting them to higher ground. It's always impressive to see the resiliency of farmers and ranchers and the ag industry and everybody working together.
It reminds me all the time of how, when you look at agriculture, everybody pitches in when it really is needed. And it's amazing what gets accomplished as neighbors help neighbors, and a lot of things get done that it's just quite amazing what goes on in agriculture.
Scott, anything else this week?
I think we've covered the major topics.
As we take a look at next week, export or trade data comes out. What are some things that we're going to be looking for there?
Well, so we've just again seen very strong trade data for a period of time. We need to see that continue as we get the latest data out next week. So that'll be really the focus of what's the strength look like. I hope we get positive news out of that data as we continue to see big supply numbers coming on domestic markets. Having strong trade data is something that maybe we can reverse what we've been talking about of late, and that's been lower prices for cattle and hogs.
Well, we'll definitely break down those numbers and talk a little bit about what happens in the shortened trading week next week. Have a great holiday weekend. You do the same, Megan. Thanks, Scott. To have our weekly livestock market update delivered to your email box every Saturday morning, go to our website, brownfieldagnews.com. Click on the subscribe link. You can also submit questions and comments if you have them. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.